Imagine a retail giant bouncing back stronger than ever, defying economic headwinds with a catchy tune and stylish jeans that had everyone talking. That's the story of Gap's remarkable turnaround, and trust me, it's got more twists than you might expect. But here's where it gets controversial. Could this viral success be masking deeper challenges in the fashion world? Stick around, because we're diving into the details that most people overlook, like how a simple ad sparked a sales surge amidst industry struggles. Picture shoppers strolling by a Gap store in London's bustling Oxford Street on October 30, 2025, oblivious to the buzz building just blocks away. Apparel powerhouse Gap announced on Thursday that its comparable sales jumped 5% in the fiscal third quarter, fueled primarily by stellar performance at its flagship brand. This boost came hot on the heels of their hit Better in Denim campaign featuring the infectious Milkshake vibe with girl group Katseye, which went viral and captured hearts and wallets worldwide. Setting aside the unusual spikes tied to pandemic-era trends, this 5% uptick marks Gap's most robust comparable sales growth since the holiday quarter of fiscal 2017, comfortably surpassing Wall Street's predictions of a mere 3.1%, as reported by Street Account. For newcomers to retail lingo, comparable sales are a key metric that compares performance from similar stores or periods, stripping out the noise of new openings or closings to give a clearer picture of organic growth. In a chat with CNBC, CEO Richard Dickson painted an optimistic picture, noting that Gap hasn't had to slash prices as aggressively to move merchandise. Instead, they're attracting shoppers across all income levels and kicking off the holiday season on a high note. Even as external indicators point to economic strain, especially for budget-conscious buyers, our offerings are delivering unbeatable value and styles that stand out in a crowded market, Dickson explained. Our products are truly connecting with people, so we're stepping into the holidays with real confidence. Gap stock climbed 5% in after-hours trading that day, reflecting investor enthusiasm. And this is the part most people miss. While the viral ad gets the headlines, it's Gap's broader strategy of blending cultural relevance with operational efficiency that's driving sustained success. To break it down further, here's how the US's top specialty apparel company stacked up against expert forecasts in the quarter, based on analyst surveys from LSEG. Earnings per share, a solid 62 cents, edging out the anticipated 59 cents. Revenue, $3.94 billion, just nudging past the expected $3.91 billion. That said, net income for the 3 months ending November 1 dipped nearly 14% to $236 million, or 62 cents per share, down from $274 million, or 72 cents per share, in the prior year. Total sales hit $3.94 billion, a 3% increase from the $3.83 billion recorded a year ago. Looking ahead to Gap's fiscal year wrapping up in early February, the company has upgraded its sales outlook to the upper end of its prior range, now projecting 1.7% to 2% growth, right in line with analysts' estimates. Previously, they had penciled in a 1% to 2% rise. Additionally, full-year operating margin is now expected at about 7.2%, up from the earlier 6.7% to 7% bracket. This includes factoring in tariff impacts, which could shave off 1 to 1.1 percentage points. Think of tariffs as extra taxes on imported goods that raise costs for companies like Gap, ultimately affecting prices and profits. Comparable sales across Gap's umbrella of brands, including the namesake Gap, Old Navy, Athleta, and Banana Republic, have stayed positive for 7 consecutive quarters. Under Dickson's leadership, the focus has been a dual punch, ramping up profits and streamlining operations while reigniting cultural buzz, leading to steady portfolio-wide gains. Profitability has been on the rise, but tariffs are throwing a wrench into the works. During the quarter, Gap's gross margin slipped 0.3 percentage points to 42.4%, though it still beat expectations of 41.2%, per Street Account. Finance chief Katrina O'Connell attributed the 14% net income drop mainly to these tariff pressures in her CNBC interview. But here's where it gets controversial. Gap's outperformance shines in a sector where apparel sales are generally sluggish, with shoppers prioritizing essentials over luxuries like new outfits. Beyond bargain hunters at giants like Walmart and TJX companies, many retailers are reporting subdued earnings, citing economic uncertainties and caution ahead of the holidays. Some are even spotting warning signs, like consumers opting for cheaper eats instead of discretionary buys. Dickson highlighted Gap's diverse brand lineup as a safety net in turbulent times, enabling them to woo customers from various walks of life. Our range of brands caters to so many different shoppers, offering us flexibility in this unpredictable climate, he remarked. Let's zoom in on each brand's quarterly performance. Gap. The core Gap brand has been the centerpiece of Dickson's revival since he became CEO over 2 years ago. Comparable sales soared 7% this quarter, double the 3.2% analysts had foreseen, while revenue climbed 6% to $951 million. The viral Milkshake campaign, blending Khalees' iconic track with Katseye's fresh energy, undeniably boosted momentum. Yet, Dickson emphasized that the brand's success is built on reliability, superior products, savvy marketing, and strategic collaborations. Old Navy. As Gap's revenue leader, Old Navy saw sales jump 5% to $2.3 billion, with comparable sales up 6%, well above the expected 3.8%. Growth shown in denim, activewear, kids' clothing, and baby items, proving that everyday essentials can still dazzle. Banana Republic. This polished, office-ready label is mid-turnaround, but it posted a 1% sales uptick to $464 million and a 4% comparable sales gain, outpacing the 3.2% forecast. Positive comps for the second straight quarter were credited to enhanced marketing and merchandise improvements. Athleta. Here's a sore spot. Athleta's revenue and comparable sales plunged 11% to $257 million, a stark contrast to the group's overall wins. Dickson has dubbed this a reset year, but the timeline for rebound remains fuzzy. We're not happy with the direction, but we're committed to the brand's potential, he stated. The team believes in it, and will invest for the long haul, it's worth it. So, is Gap's viral triumph a sign of savvy marketing triumphing over economic woes, or could it be a fleeting high before tariffs and consumer caution tighten the screws? What do you think? Do cultural campaigns like this truly shift the fashion landscape, or are they just band-aids for bigger issues? Share your thoughts in the comments. I'd love to hear if you agree, disagree, or have your own take on how retailers can navigate these choppy waters.